the world where we are in the evening time. So my name is Mohd Faizal, and today I would like to talk about the competition, ethical governance, and also the sustainable finance, right? From the evidence of development financial institutions in Malaysia, right? Or what we call them as DFI. Okay, so development financial institutions promote inclusive economic growth by providing credit to the underserved and also the strategic sectors. Unlike the commercial banks, whereby when we talk about commercial banks, they're focused more on, promoting savings and also provide financing to pretty much the majority of the populations. DFIs balance the dual mandate, whereby they are focused on the long-term public policy, especially with regards or aligned towards the government's policy and objectives. And also at the same time, they have to, fundamentally try to provide their sustainability as well. And there's a recent policy reforms led by the Central Bank of Malaysia, whereby they try to strengthen the DFI resilience, the governance, and also the value-based financing. And as part of the UN Sustainable Development Goals or SDGs, the FI has to, comply and try to align their rules together with the Central Bank of Malaysia's VBI, or what we call as the Value-Based Intermediation Framework. So when we talk about the problem statement with regards to this scenario, there are two areas, okay, that we are going to look at in terms of the market concentration, okay, at the same time, the threat of mission drift. As I mentioned earlier, each DFIs have their own rules, their own mandates, and we're going to see whether there are slight difference in terms of what are their initial rules and what are they actually offering at the same time. Okay, so these are the two areas that we're going to look at from the market concentration duality. From the positive point of view, we're going to see how the DFI generates economies of scale and improve their operational efficiency. And at the same time, we want to see how this excessive concentration may limit to the financing alternative. So among the methodology that we're going to use later, you're going to see we're going to test the concentration level. Okay, and from here we can see whether this excessive concentration may limit these financing alternatives or not. And going back to the threat of mission drift, especially when we have this ethical challenge, try to balance between to meet the financial sustainability and again to comply with their mandate, whereby to add on with the developmental additionality, okay, together with the central governance tension. Right. In terms of the research gap, okay, obviously there are some gaps if you compare against the existing research, because even myself, for example, my research mostly relates to the competition and market efficiency. And when we talk about the overall market and efficiency research around the world, mostly we're going to talk about profitability. And specifically for the banking industry, for example, most of the research focusing more on the commercial banks, okay, and also the emerging of Islamic banking, especially in the Southeast Asia region and also in the Middle East region. Okay, however, not much or very limited focusing on DFIs, the development financial institutions. And we're going to explore as well in terms of the responsible lending, the sustainable finance, and together with the mission drift that I mentioned earlier. So these gaps motivate the research questions that I'm going to share with you next. Okay, so these are the research questions. And the three elements or the three areas that I'm going to look at is based on the prevailing market structure of the Malaysian DFIs, Do the current competitive conditions support their developmental mandates? And what are the implications for ethical governance and also the sustainable finance? So this is the overall framework, okay, of my paper. It starts off on top based on the National Development Agenda, together with the financial sector blueprint. This is specifically created by the Central Bank of Malaysia, focusing on the financial sector, and DFI belongs to one of the sector together with the other parts of the banking industries. Okay, and for the DFIs, we're going to look at three different areas. Okay, number one is from the competition point of view, right? And for the market competition, we focus on three areas: the market concentration, the competitive behavior, and also the market structure. From the ethical governance, we look at the responsible lending. So this is where we see their mandates, whether they are transparent, okay, with their lending activities, how accountability plays important role in their ethical governance, and how much they adhere to their mandates. Okay. And last but not least, in terms of the sustainable financing, relates with the ESG principles, whereby ESG stands for environmental, social, and also governance. And these three components, okay, will derive their financing allocation behavior, okay, from two perspectives, whether they focusing on the productive financing, okay, because as I mentioned earlier, the FI has a very dedicated mandate. They are not focusing on consumer financing, for example, but we look at the actual transactions. There are actually some of these DFI whereby they are majority, or not to say majority, but there are some percentage of their financing activities involve consumer financing instead of productive financing that can grow the economic growth of the Malaysian, especially when we talk about Malaysian industries. Okay, and these are the three areas from the competitive nature that I mentioned earlier. This is more on the elaboration. Okay, so from competition, we look at two areas: concentration ratio, CR3, and also CR5, whereby CR3 is to assess the market share held by the top three of the institutions within the industry, and whereby the CR5 is actually when we talk the top five of the institutions in the same industry. And I use HHI, Findel Hirschman Index as well, to see the level of concentration, okay, concentration structure. And in terms of behavioral approach, in terms of competition, I use Panzaro's model, okay, whereby there are going to be three elements or three possible output, whereby whether it's monopolistic, oligopoly, or it can be a perfect competition, okay, depending on the results. And in terms of the research methodology and data scope, my study focused on a balanced panel data of 10 Malaysian DFIs, covering from the year 2009 up to 2020, with 120 unique bank year observation in total. Right, so meaning a 12 years of data for 10 Malaysian DFIs. Okay, and the sources comes from basically from annual financial statements of the companies, using several databases, including Refinitiv Icon. Okay, and the 10 Malaysian DFIs consists of two groups of DFIs. We have 6 prescribed DFIs and 4 non-prescribed DFIs. So what's the difference? When we talk about prescribed, these are actually regulated under the Development Financial Institutions Act 2002, whereby the non-prescribed are not part of this regulation or part of this act. So now let's look at the results. Okay, so based on the empirical analysis, based on the CR3, the financing mean is about 80%, whereby the assets mean is 74%. And for the CR5, it's higher at 91%, with the assets mean close to 86%. So these, you know, results commanding over 80% of the results, or it shows that the top three controlling about 80%, and the top five of the companies out of 10 controlling 91%. So it's quite high in terms of the CR ratio. Whereas for the HHI, both financing and assets consistently exceed the international threshold that indicate they are highly concentrated structures. Okay. And from this result, we can see that, or we can conclude that Malaysian DFIs operate under the monopolistic competition and reflects market power derived from government support, specialized and also customer segmentation. And I'm not going to talk into details in terms of the statistical results, right? And as you can see here, when we talk about the mandates aligned, you can see that the highest number of alignment comes from the Bank Rakyat, whereby the dominant sector is consumption credit. And in fact, the second one is BSN, which also focusing on the consumption credit, which is go against, okay, they are supposed to focus more on the economic growth industries like construction for BPMB, and for agrobank with the crops or agro-based activities, and also for SME and also Exim Bank. So this high consumer allocation supports retail financial inclusion, but crowds out long-term productive and also agricultural modernization. Okay, so the observed monopolistic competition represents a stable environment that preserves solvency and institutional sustainability. And in terms of the VBI realization, it aligns competitive conduct with Central Banks of Malaysia's VBI framework. And from ethical point of view, market structure is not merely an indicator of efficiency, but a determinant of capital allocation ethics and also equitable credit access. So these are among the policy recommendations, whereby instead of just look at, based on compliance of mandates, we can create, okay, the mandate-based performance metrics, whereby we're going to see how the institutions align their actual transactions, actual, activities against the mandated activities. Okay, and try to strengthen responsible lending. This is basically from the Central Bank of Malaysia's jurisdiction, whereby to establish, is there any limits on retail consumer financing, and try to prioritize or try to encourage these DFIs to prioritize long-term productive financing. Okay, and in terms of competition policy design, based on competition policies, and just not just on rivalry, okay, and to accept moderate consideration when coupled with rigorous ethical governance and public accountability. So as a conclusion, the key findings of the paper find that Malaysian DFIs operate in a highly concentrated market. Okay, this sector exhibits monopolistic competition. Okay, and this competition influences governance and also financing priorities. And at the end of the day, responsible lending is very much essential to preserve the developmental mandate. And one final important message here: competition should be evaluated not only by market efficiency, by its contribution to ethical governance, responsible financing, and also sustainable development. Right, so these are among key references for the paper. And thank you very much.